Okay guys, welcome back. This is my closing market analysis. There's a couple things I want to go through as the market closed out, and we'll cover through the charts. Again, if you're new to the channel, we use stock market technical analysis to really find trade ideas. I point the trades out, I give you guys the setups, I give you the technical case for the setup, and typically that's in advance. So this channel is all about pointing out trade ideas. Again, you don't have to take them. Nothing's financial advice. Everything in this channel is just my opinion. But so far this year, we've been extremely profitable with all these trade ideas, mostly shorting the market since January 4th and in tech. Okay, so starting off, guys, I want to talk about the Fed. And the Fed is continuing down the path of hiking rates. We haven't heard any change there, so they're just continuing down that path. But again, when the market started to sell off, I talked about how the Fed was looking to walk the markets down. Okay, they don't want the markets to crash. They want the markets to move lower in a well-mannered way. So we've seen a pretty decent move down so far from the highs. All right, the all-time highs here in triple Qs, we're down, and this is our tech sector. We're down about 26, at the lows, about 26%. We've essentially given back all the gains from about this time frame right in here, October of 2020. So pretty much all of 2021's gains were given back, and then some of 2020. So in just a matter of a few months, we gave back the entire year of 2021. And so that's a pretty good sizable first move, okay? If we go much lower from where we're at right now, the market is gonna crash. Okay, so there is that potential. I definitely want to talk about that and point that out. There is the potential for the market to crash. We'll keep an eye on it. I don't think it's that likely. I think the market is probably going to try to find a base here around this area. And let me show you why technically. Okay, starting off on the triple Qs, we still have bullish divergence. Okay, it's still there in the RSI. As I zoom in on the RSI, you can see that we're starting to confirm that divergence. It's starting to turn up, okay, right here. So bullish divergence on the RSI. Looking at the PPO, that one actually is still, we could still say if it turns up tomorrow, it'll probably hold this bullish divergence as well. So we still kind of have it across the board on the momentum indicators. Okay, so that's a bullish momentum. That's bullish momentum. Okay, second, we've hit my price target, 298. I had it at 298.24. All right, that's where I had this target, and we dipped down to about 296. Okay, but again, basically hit my price target. That's been cleared out and very profitable. Again, if you've been following me, we shorted this market on January 4th. So right here, I have it circled. I shorted it right there. And then we rode the first leg down, got out before this big bounce, and then we reshorted it right there on the tick above the 200-day simple moving average. Okay, so those are our two shorts that we initiated on the market, and that's been very profitable. But now we are at my support. This level 298 is good support. You can see it was support here, 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 and then it was resistance there and there. Lots of reactions. We've undercut it just briefly. We should hold in this area. All right, so what I'm looking for is, do we hold in this area? We've got the inflation reading coming out tomorrow. So if that comes out and it's less than what it was before, which I think is not that difficult to do since it's been at like all-time highs basically, or extremely high readings. So to be a little bit less than that, not that difficult, the market will appreciate that and see that as giving the Fed an opportunity to ease on some of its hawkishness talk, some of the hawkish talk. So it should rally on lower than expected inflation. If you get that, if you get higher than expected inflation, we have the potential to crash. Okay, by crash I mean possibly another, over the next few days or weeks, we could fall all the way down to this level of about 238. All right, that's another 20% down in tech. That is your pre-COVID highs right there. Okay, that's where we were at before they did all the COVID money pumping. So that would be my target. All right, if we're going to get a crash, look for that to be solid support. All right. So that's it. I don't know which way it'll go, but we are at good support right now with bullish divergence. So if we see some sort of a gap down, kind of below the level that right now, 298 is the key level. You see a gap down and it starts selling off. It tells you that we're probably are going to get that crash action, and we're going to make a pretty strong move down to the pre-COVID highs. And there's the level to watch. Okay, moving on, small caps. So the small caps, here's your pre-COVID level right here, 170. Okay, I've had that marked out. That's very good support. That was former resistance. We had this big sideways pattern here, and we have since run down, and today sold off and pretty much stopped 170, 117. That's close enough. You're only within 50 cents basically of that support level. So effectively, we have hit our profit target right there. Okay. So congratulations for anybody that shorted that. Again, we initiated the short right here pretty much on January 19th, I think is when I grabbed that one. And that was one opportunity. And then I also shorted it right here on November 2021 because we had this big sideways pattern. We broke to the upside. That breakout came with negative divergence though. So again, that told me that was very likely to fail. And then when it failed back within the range, I shorted it right there. All right. So again, very profitable. I mean, from that short all the way down to here, 26% gain. But again, we are at good support. We do have bullish divergence in both momentum indicators. Not confirmed yet, but it is there. So if you start to rally here and the momentum indicators start to turn up, then that's likely going to be your confirmation that this is going to be a near-term bottom. Okay? If we, for some reason, break this level, then we're going to crash. And on this one, we're probably going to head down. This one's already come off quite a bit, but we could probably come down to this level right here, 145.66. Okay? So, again, going back to the narrative that I think the Fed wants to walk the market down, and bear markets don't, and I think we are in a bear market. Again, even though I think we're at support and maybe we could rally here, we are in a bear market. So bear markets don't just crash usually right off the bat. They don't look like COVID. They don't look like this big drop right here. All right. They look more like they work their way lower. They rally, they move lower. They rally, they move their lower. And then towards the end, you'll see capitulation where everyone throws in the towel and they crash at the end. Okay. And that's typically the bottom of the bear market. But they don't usually start off with a crash. So it makes sense logically that we would see support here. It makes sense that the Fed doesn't want the markets to crash, so they want to walk the market down. The inflation reading is likely going to come out a little bit less, I guess. That's kind of what I would anticipate. So if the inflation reading comes out lighter than expected or less than last month, I guess, the markets can hold and can rally here. Okay? And then going to gold, gold on the daily chart hit our long-term bull market support, which really started back in 2018. You can see I've got all the tags of the trend line. Let me, if I can grab the right tool, marked there. Okay, we hit support, rolling up, hit support. There's one, there's one, there's one, there's one. And we're pretty much right at it. We're just slightly below it, but again, this is not going to go anywhere, I suspect. If it sells off, it's probably going to be a false breakdown because the inflation reading's coming out tomorrow. So I don't think it'll sell off too much below the 200-day moving average and this trend line before that inflation reading comes out. And if it does, it'll look like that, and then they'll rally it back up. It'll be a false breakdown. So look for that. Now, if it holds here and then we get the inflation reading and they don't like it, it could break this bull market trend line. Okay, it's completely possible that we break the bull market trend line in gold and we start to move lower. I'm not anticipating that. I think we rally here. I think gold is probably going to be a buy in this area. But again, we've seen some pretty impulsive selling in some of these mining stocks. And so gold's holding up relatively well. It doesn't, it's pretty strong. I mean, relatively strong. But the mining stocks have been selling off pretty good. So if gold's going to hold here and continue to rally and build on this and hold this support, you should see a pretty strong snapback in these mining stocks. Okay, so keep an eye on that. Okay, the S&P 500, tech sector's sold off already. The small caps have sold off a lot. The S&P 500 isn't too far off from its all-time highs. I mean, here's the all-time highs, and as of right now, we're down about 17%. So, and the pre-COVID highs are right here. So as the small caps have hit their pre-COVID highs, the S&P 500 still has a ways to go, down to 330, 340, okay? So that, from where we're at now, is a drop of about 15 more to go. So, moving on, if we're going to look to short the market, because the small caps have already sold off pretty good and they've hit those pre-COVID support levels, I'm probably going to be looking more to short potentially the SPY or just the triple Qs, okay? Triple Qs still has a ways to go. Pre-COVID levels are right there to, again, 238. And, that's another drop of another 20%. So the SPY and the Q still has potential downside, but the small caps, we hit our pre-COVID lows right here. So it just didn't rally as much as the tech sector, and it probably maybe doesn't have to sell off as much. Again, if we're going to get that crash, these will probably sell down as well. So things to look for, but I think there might be some more potential to see the sell off in the SPY and the triple Qs. One reason why the SPY might be good is you've got a lot of the defensive stocks that everybody's been hiding in. So XLV, that's your healthcare. Okay, healthcare. This is your bull market going all the way back. I have to go to a weekly chart for it, but going back to 2009, you can see here's your bull market in XLV. One brief undercut on COVID, but you just throw that out. That's an outlier. And all these reactions, we held support. And zooming in, you can see here we are. We are coming into that bull market support line. So you should bounce here, but if it breaks, then that's a sell signal in XLV. And that's just another, that's just another nail in the coffin for the, for the fact that this is probably a bear market. You're not going to have a bear market until you see everything has to sell off. You're going to have the strong sector sell off. This one has big weekly negative divergence. Look at that negative divergence on the weekly chart. Momentum has been dropping off as this has continued to pop higher and higher. Those are divergent highs. Guys, check out my stock market technical analysis course if you're unfamiliar with these concepts. Link in the description below. Okay, I made that available for all my subscribers. It's not free, but it's not expensive. It's affordable, and the skill set that it helps you learn, I think, is well worth the money. So again, link in the description below. Check that out if you're interested. All right, so XLV, we're looking for a break here, all right? This negative divergence tells me we're going to break. We're probably going to get a bounce, at least on the initial tag, because you can see we've pretty much come straight down, all right? Healthcare has come straight down into this trend line. It's dropped from the highs down to where it's at now, 11%. By the time you get there, 13%. So you're probably going to get a week's bounce, maybe a couple weeks, some sort of a bounce. Maybe a bounce back up to the 200, and then you're going to break. So I'm not interested in shorting this thing until it breaks, but I think that is probably the way to play this, all right? You could play it for a bounce at the trend line. I'm more interested in just letting it do its thing. If it's going to bounce, let it bounce, and then probably look for a break of the trend line. The negative divergence tells me it's going to happen. Okay, so that just goes back to the SPY. All right, the SPY looks like it has the potential to sell off more than like the small caps. The tech sector, it's come off pretty strong, so it might need to take a breather. It could crash. Again, I pointed out the scenario that I'd be looking for, but the SPY looks like it's a potentially good thing to short, but we need to see XLV go, and that will be that's kind of the where everyone's been hiding out. And so if we start to see those sectors go, then it just will continue the bear market. All right. Okay, CAR. This is just a short idea. Again, we got the sell signal on CAR yesterday. So there's the sell signal. Weren't too far off from it today. They tried to make it look like they were going to recover, but they couldn't. And it basically closed the day pretty much at the same area that it closed yesterday, 227.25. So we need to take that out. That should go pretty soon, maybe even tomorrow. But 227.25. That's very, very short-term support. And at the end of the day, this sell signal is still intact, all right? They rallied it up and sold it off right back down to the same area that closed yesterday. So we should go lower. This is looking just fine for more downside, okay? On the shorts, like triple Qs and IWM, I did cover those shorts today. I just want to make that clear. I'm no longer short triple Qs, and I'm no longer short IWM. If we get that crash scenario, I'll jump right back in short. But for now, because we're at support with those bullish divergences, it looks like we're probably going to hold here, at least for a couple weeks or days. I don't know how long. I think we'll hold here for a little while, though. So I did cover those short. One stock to really watch is Apple. So Apple has been on the top of my radar. I've got it up, I'm really focused on Apple. So again, this trend line on Apple, I pointed it out, it's very key. And you can see yesterday we broke, all right? Today, they basically gapped it up right at resistance, recovered the trend line briefly, sold back off, closed back below the trend line, but not too much, all right? It's just right there. So that's not good enough for me. I need impulsive selling to consider a sell signal. Yesterday it looked good. Today gapping it up and just kind of keeping it right within there. They could recover this trend line, okay? So if they do that, they're probably going to bounce likely up to this downtrend line here at 162 or so. And so that's what I would be watching for. I'd probably be interested in shorting Apple on a tag of this downtrend line right here. And that right now it's about 162. 163. Tomorrow it'll be at 163. Okay, but if they gap it down or sell it down tomorrow and it just continues to break, then I'll consider that a sell signal. But as of right now, I just don't think we have enough in the cards to say that we've got that sell signal. Because here's the thing: yes, yesterday was a sell signal in Apple, but Qs fell to that long-term support. All right, so Qs fell to big support today. IWM fell to big support. And Apple is below its trend line, but just barely with those other two indices at long-term support. So I think there's probably elevated probability that you're going to recover and rally up to this trend line. And then Apple will break on the next leg lower. So Apple will probably hit that, come back down in the future, break, and then that break will be the real break. Okay, sometimes when you get the first initial break, they like to do a little bear trap, and then they recover it, and then the next break is the real break and the real sell signal. So that's how I'm treating it. I'm not short Apple, not short Qs, but I am, these are things I'm looking at. Amazon. So Amazon has really good support right here. It's a very clean and obvious level, 2038, all right, 2038. So because it's such an obvious level, and as I zoom in, you can see we're basically there. All right, we're pretty close. I mean, we've got a little bit more downside to hit that level, about 5-6%. But again, because that level's so obvious, I think they step in early. Okay, I think the buyers are stepping in early, looking to buy Amazon down here. Again, you have to remember, Amazon from the highs down to where it's at has sold off 42%. Okay, so this is a major cap tech stock that has almost been halved, all right, in price. So that's a lot of losses, and you can see all this sideways trading action. All these traders here that were buying Amazon, they've all just capitulated and taken on losses and probably sold out. So coming down to major support, the buyers are probably going to step in here pretty soon. Again, this was the key level that I had on the weekly chart for Amazon for the kind of the first bear market bounce, and that's why I had this line drawn. I think we probably get a bear market rally here. Again, Amazon is in a bear market, okay? Here's your 2008 lows, and here's your trend. Here's your bull trend for the last 12 years or so. We topped out. We broke trend. We had a big sell signal, kind of chopped around for a couple months, and then finally she gave it up, and it's clearly in a bear market. But just about the time that things look very obvious that they're in a bear market is when you get the strong, impulsive bear market rally. So I think we're going to get one, and I'm looking for that. I don't see signs of a bottom yet, but again, I'm just pointing out that key support. Don't have bullish divergence on the weekly, and you're not going to usually get that in the bear market. Don't really have it on the daily either. If we go to the hourly, starting to kind of build it a little bit here on the hourly. So we'll see. Again, usually it's going to show up on the hourly, and then that's what you're going to get a rally on. You don't even usually get it on a daily in a bear market. Things don't move too quickly in a bear market. They fall and rally too quickly. But there's something to watch. So what you could probably do is kind of mark out a trend line like this, draw out that trend line. If you see a break of this trend in Amazon, then you're probably going to get a rally all the way up here to 2,906. Pretty strong impulsive rally, you know, and rally all the way up there, and that would probably be the next objective area to short. Yeah, sorry, I got it right up here at this gap fill, about right up in there somewhere. I'll have to kind of fine tune it, but maybe the rally just ends right here, 2,750. All right, but the point is, bear market rally. We're at the point where we probably are going to get some of these strong rallies in the market. So I'm keeping an eye out, and that's why I went home flat. I'm not long, but I also am not short those major indices anymore. So that's all I have, guys. Tomorrow should be interesting. Gold has the potential to rally. The markets have the potential to rally. But if the market doesn't like what it hears, then we're probably going to get some sort of a crash. So, and I've pointed out the downside. So, yeah, we'll just see what we get. All right, thanks. Catch you guys later. Bye.